Hey guys, welcome back to the channel. In today's video, I will be providing an extensive overview of Bitcoin and its relationship to the US dollar currency index DXY. So I'll be looking at the correlation coefficient, which is this chart on the bottom frame, and the relationship between Bitcoin and the US dollar currency index by looking at some historical trends. And we're going to use this information to analyze Bitcoin today, seeing as how the US dollar currency index is really starting to break down its structure. We had this parabolic advance as illustrated by this increasing slope of the white line, and we've started to break down below that. We've got some bearish divergence on the weekly chart, and we're also starting to break down some of the support levels. So we'll talk about all of these things in today's video and why this is important for Bitcoin going out into the next few months, leading into a longer term cycle low and longer term momentum shift. So I hope you guys do enjoy the content and the analysis. By the way, make sure to check out my Twitter page. I'll leave a link to that in the description below. If you guys enjoy the content, please do leave a like and subscribe. So on this chart, I've got a lot of things going on. The bottom frame is the correlation coefficient, which basically just summarizes the fact that Bitcoin has a very strong negative correlation to the US dollar currency index. And what that means is it's pretty close to -1. That is the strongest negative correlation you can have between two assets. And basically what that means is when one of the assets is moving up, the other typically moves in the opposite direction, so it would be moving down. And what I really want to focus on is the historical trend and nature of this relationship, where we can look at the Bitcoin peaks as well as the US dollar currency index's peaks and notice how they tend to be very important and longer term signals of the other asset's direction. So if we go right here and start off in 2013, this bull market cycle led Bitcoin to a peak all the way up around $1,220. And by the way, Bitcoin is this orange line with scale on the right axis, and then the DXY is going to be the blue line with the scale on the left axis. So Bitcoin, as you can see right here in 2013, had that bull market peak, again around $1,220. And this really corresponded to a local low for the US dollar currency index. It started to go sideways, and then eventually when Bitcoin started to enter those later phases of that bear market, the US dollar currency index, again the blue line, really started to kick off this bull market rally. It continued up higher and higher and higher, and then it had this first intermediate peak right here in March of 2015, which is around the time where Bitcoin started to slow down this bear market momentum, go sideways, and then gear up for a longer term base into another cycle. And then eventually when Bitcoin formed that second cycle all-time high, that second peak, right around $19,800 in December of 2017, that very famous parabolic run, you can see this is when the US dollar currency index was in its descent. It basically had this peak right here in December of 2016 around 102. And then over those following few months, while Bitcoin was in that parabolic stage, the US dollar currency index continued to decline all the way until this local low right around 89 in January of 2018. And this was the time frame in January of 2018 when a lot of the altcoins, Ethereum, had their market cycle peaks. So you can see how that has a very strong negative correlation in this time frame. And then Bitcoin later on started to have that bear market decline. You can see it in the orange line, came back down to a local low in January of 2019 around $3,800. And then that was all meanwhile the dollar was increasing. We had this pretty remarkable rally with the local low in January of 2018 around 89 all the way up to this intermediate term peak in September of 2019 at 99. So that negative correlation continued where the US dollar currency index continued its rally. Meanwhile, Bitcoin had this pretty aggressive bear market. And really the point of going through all of these historical trends is just to establish this relationship, how strong it has been over Bitcoin's entire history, and just describe what this correlation coefficient is actually telling us. It has been negative for the majority of Bitcoin's entire history. Yes, we've seen periods where it has gone positive, but over the longer term scale, over the longer term time frame, we can see how these assets typically resolve in opposite directions. And that is going to be extremely important for us to watch over for when we're looking at the structural changes to this chart with the US dollar currency index. So if we do continue on, we can see that same pattern continue to play out. with Bitcoin, where we really had this sentiment-like peak in March and April of 2021. That's around the time frame where the US dollar currency index was forming this double bottom right at this valuation of around 89. And then from there, the US dollar currency index continued to go on this very remarkable rally to this peak that we had back here in September, right around 112. And that was really when Bitcoin started to enter this bear market, sentiment started to die down, and ever since then, we've really just seen lower lows and lower highs. So again, we have seen the US dollar currency index form this intermediate peak right now at around 112. And right now we've come back down to this valuation of around 104, which if you're familiar in crypto land, that might not seem like a lot, but for the DXY, that is a lot to have gone down in just a few months. And this decline on the DXY has really led to some structural changes in this chart. So I do want to switch over to that chart. And this is on a monthly scale so that we can go all the way back to Bitcoin's entire history. So we're switching over here to a weekly scale where this only goes all the way back here to February of 2021, where DXY really formed that bottom, that double bottom around 89. So with this, we've got that parabolic rally where the rate of change has been rising ever since that first bottom that we had right here in February of 2021. So we've had that move, we've made higher highs, higher lows, and continue to go on this very impressive rally by the DXY all the way up to that peak again back in September. But since then, we've started to come back down. We've broken this parabolic line I have drawn, which is definitely not the best signal considering how, you can just redraw these lines. What I want to focus on instead is the fact that structurally, stuff is starting to change. We're no longer holding support. We're no longer forming higher lows. And in fact, you can see that we've lost this level of support right around 108. That was a previous high that we had back here in July. We flipped that into support in September. But again, we've broken back below that. And on the last few weeks, we've come up to that level and rejected off of that. So even though you can redraw these parabolic lines, you can't just keep illustrating and pointing to the fact that we're in a parabolic advance when you're starting to see these declines start to play out, when you're starting to see these breakdowns of support. So those are the initial signs that we're looking at. We also have this bearish divergence on the weekly chart where the closing price has been rising from May of this year all the way up to that peak again around September. Meanwhile, the relative strength index, which is this chart on the bottom, has seen a decline from that point, where in May we did have a valuation on the RSI of around 81, and then that peak that we had in September only got up to a valuation of around 76. So the fact that we were less overbought while the closing price continued to rally really signifies this bearish divergence, which is a sign that we typically see around tops and longer term momentum shifts. So along that, we also have the RSI breaking back below 50, which is the neutral point. And anywhere above 50 means an asset is overbought. And you can see ever since that bottom, DXY remained overbought from that first breakout right here in June of 2021, all the way up until we lost that just last month in November. So all of this is telling me that this uptrend and the strength of DXY is really starting to weaken. We're starting to see that momentum slow down. We've got the initial signs of a longer term top in place, and the implications on Bitcoin on the long-term scale, given that we have such a strong negative correlation, could be pretty bullish, right? If we do have a longer-term top in for DXY, like we had back here in March of 2015, as well as September of 2019, that could be very, very bullish for Bitcoin on the long-term cycle perspective, where we might start to see that negative correlation work in Bitcoin's favor, as opposed to working against it on this big parabolic move of DXY over the last few months, going back to this double bottom again around 2021. So I hope you guys did enjoy the content and the analysis. By the way, make sure to check out my Twitter page. I will leave a link to that in the description below. As always, I hope you guys enjoyed, and I will see you in the next one.